Bitcoin's a drippy, like the new Scotty Pippy. Shout out to Nippy, your chairman of the SEC. In today's show, I'll be sharing the latest Bitcoin technical analysis as the correction continues. Also breaking news, U.S. Justice Department says it will no longer target self-custody Bitcoin wallets and privacy services. Sovereignty and privacy are winning. We'll also be discussing crypto execs expect global banking push into Bitcoin by the end of this year, 2025. We'll also be discussing Bitcoin may rival gold as an inflation hedge over the next decade, according to Bitcoin OG, Adam Beck. Also, lawyer sues the U.S. Homeland Department to probe supposed Satoshi Nakamoto meeting. They want to know who the real Satoshi is. So will you stand up, Nippinator? We'll also be discussing technical indicators suggesting Bitcoin bull market hasn't even started yet. According to the quant analyst, Plan B, creator of the Bitcoin stock to flow model, I'll be sharing the latest update from Plan B. And I have the most bearish scenario. Bloomberg analyst predicts Bitcoin can sink all the way back to 10,000 per coin. And also hit you with some bullishness. Jan 3 founder Samson Mao says Bitcoin should be at 200,000 right now, or even 2 million per coin. We'll also be taking a look at the overall crypto market. All this plus so much motherfucking and more in today's show. Let's kick this mofo off. If you're new to the channel, important, smash the likes, go ahead, subscribe. We're the #1 daily Bitcoin pod. Be sure to ring the bell, turn on all notifications to receive daily premium crypto news alerts every single day, 7 days a week, just like this. Today is pod episode 1957. I'm your host, JV. It's April 8th, 2025. Markets are a tanking. Bitcoin currently just above $76,700. Let's pull up Coin 360 for our market watch on the day. And as you can see here, bulk of the market in the red. Ether down 5%, trading in the $1,400 range. XRP down 4%, trading at $1.81. The bulk of the market correcting, obviously. And checking out coinmarketcap.com. The current crypto market cap sits at all the way down to 2.4 trillion. That's wild. That's the entire crypto market cap. And the Bitcoin market cap's all the way down to 1.5 trillion. Checking out the volume, looks like 110 billion worth of volume past 24 hours. Bitcoin dominance on the rise, 62.7% as the Ether dominance continues on the decline, all the way down to 7.3%, the lowest it's been in several years, the lowest the price action has been in several years. Not a good look for Ether. Checking out top 100 crypto gainers past 24 hours. We got Core leading the pack, up 14%, followed by the infamous Fart Coin, up 9%, followed by Privacy Coin Zcash, up 5%. Now, which alts, if any, are you bullish on for the bull? Holla. Checking out the crypto bubbles. I like to share this to get the visual perspective on the day. And unfortunately, we're in the blood red. 90% of the market getting wrecked. Zooming out on the weekly, oh my God, like 97% of the market in the blood red. And zooming out on the monthly, it just gets worse and worse. Minus Fartcoin, there's always an exception to the rule. And apparently Fartcoin and EOS are in the green. Everything else in the blood red. And checking out the Crypto Greed and Fear Index. We're still in extreme fear at 24 today, yesterday at 23. We did tap a new bottom the other day of, I think it was 74,420. So happy 420. Broskies. Last week at 34 and last month at 27 in fear. And checking out the time chain calendar. We're currently on block height 891,521. We have 158,479 blocks until the halving of 2028. And we haven't seen this opportunity in a minute. 1,303 sats per dollar. So take advantage of it. Pick up the sats. Put down the gats. And pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. And if you don't know, now you know. Let's continue with the news, shall we? A little TA, a.k.a. astrology for the broskies. I'll be pulling up the live charts. Headline reads, Bitcoin rebounds as trader spot China weaker yuan chart. But U.S. trade war caps 80,000 Bitcoin rally, which is precisely where we recaptured yesterday. Bottom of 74, high of 80, and now we're ranging at around, 75, 76. Bitcoin danced around 80,000 at the April 8th Wall Street Open as the U.S. stock market staged a fresh recovery. Here, looking at the 1 hour chart, and again, I'll pull up the live charts here shortly. TradingView showed the price volatility of the Bitty cooling with the S&P and NASDAQ gaining 4.3% in the first few hours of trading, and now the stocks are back bleeding. Stocks built built a strong rebound and had accompanied the start of the week TradFi trading, alleviating fears of a 1987 Black Monday-style crash. U.S. trade tariffs nonetheless stayed top of the agenda for the traders, who in particular eyed the ongoing war of words with China. President POTUS Trumpster claimed Beijing wants to make a deal badly, but they don't know how to get it started. We'll teach them the art of the deal, Trumpster. We're waiting for their call. And there you have it. Big ass tweet from the Trumpster. I take it on Truth Social. Bitcoin advocates eyed the devaluation of the yuan as part of the China tariff response and the potential inflows. The hedges, such as the biddy, as a result, quoting Arthur Hayes, just blaze. Xi's weapon. Major independent monetary policy, which necessitates a weaker yuan. Hayes suggests that either the People's Bank of the China or the U.S. Fed would ultimately provide the fuel for the Bitcoin price rally. Quoting him again, if not the Fed, then the People's Bank of the China will give us the Yahtzee mofo ingredients. Yahtzee. Now, meanwhile, CNY deval equals a narrative that the Chinese capital flight will flow into the biddy. It worked in 2013, 2015. It can work in 2025. Ignore the China at your own peril. There you have it. Meanwhile, the Fed could boost the biddy and risk assets by lowering interest rates and stimulating the growth. Quoting Alliance Bernstein analysts, if the economy slows, as we expect it will, the Fed will be inclined to cut the rates if the price levels are high. The view is that the actual inflation tells us what the economy was doing, but not what it will do. The Fed has cut rates before with inflation elevated, and we expect it to do so again unless, a very big unless, inflation expectations become unanchored. Meanwhile, the Fibonacci offers a big level to watch for the biddy price action, considering the global market somersault of the last 3 days. The Bitcoin price action remained eerily cool on the shorter time frame as the snap price move gave away to the consolidation. Quoting analysts here regarding the Fibonacci in a bull market, the 38.2 fib retracement acts as key support. So as long as the biddy closes above it, the uptrend remains intact, even with a wick below. And Dan Crypto Trades pointed out the Bitcoin has respected the 0.382 Fibonacci retracements measured from the cycle bottom to the local tops quite well thus far. This is the third time we get such a test of the cycle. This time we got the confluence from the 2024 highs as well. That's the big level to watch. Other important trend lines include the 200-day simple moving average, which is a classic bull market support line. That was lost when Bitcoin first fell below 82 G's, baby. And we do have a live poll on the screen over on the tube. Let us know when you think the bottom will hit, or if the bottom is in. I give you some different options there. And towards the end of the show, I'll read the results from the poll. Also, breaking news, a little silver lining for the day. U.S. Justice Department says it will no longer target self-custody Bitcoin wallets and privacy services, meaning sovereignty and privacy are winning. That's what's up. So that's some silver lining for you. And I'll pull up some of the live charts for the broskies here before we move further into the news. Looking at the live charts via TradingView via Coinbase should be pulled up on your screen. This is the 1 hour. As you can see, we only have a bear scenario in the orange, sitting at 73.4. Zooming out from the 1 hour, we take a look at a infamous 4 hour chart, and the 4 hour shows a bear scenario as well, sitting at 73.4, similar to the 1 hour. And as you can see, we're correcting with big red candles, unfortunately. Zooming out to the daily, as you can see, big red candle forming, rising wedge followed by a falling wedge, extreme volatility. We do have a bull target sitting at 112.7, which would take us back to price discovery, currently sitting at 109.3. Two bear scenarios on the daily, one just shy of 69. Let me know if you think we'll retest 69. And also, we have a super bear scenario at 49. And of course, our feature story of the day, Bloomberg's projecting we can go as low as 10,000, which I personally think is ridiculous, but we're going to cover it nonetheless, followed by some bull scenarios, of course. And zoomed out from the daily, taking a look at a weekly. We do have the cup and handle target. Unfortunately, past couple of weeks have been very bearish weekly closes, so not a good look. I was hoping to continue the bullish momentum here in April, but there's no telling now with the ongoing tariff trade wars. We do have a cup and handle target, though, sitting at 124 on the weekly chart. Zooming out a little further, we'll take a quick look at a monthly via TradingView via Coinbase. And as you can see, we've been very corrective since hitting the January all-time high, and thus far forming another red candle for the month of April, but we're only 1 week deep. Next story of the day, Headline here reads, crypto execs expect global banking push into Bitcoin by the end of 2025. That's right. Despite the ongoing market meltdown on the U.S. trade tariffs, executives of major crypto firms Masari and Signum are bullish on institutional Bitcoin adoption later in the year. Speaking at a panel at the Paris Blockchain Week, Masari CEO Eric Turner and Signum Bank co-founder Thomas Eichenberger, what a last name he has, said they expect a significant shift in the banking sector's involvement with crypto in the second half of the year. And according to the executives, the global banking push into the BIDI services have great potential to happen in the second half of the year as regulators embrace thy crypto, including stablecoins and crypto services by the banksters, quoting them here. I think we're probably looking at a muted Q2, but I am really excited for Q3 and Q4. Masari's Turner said during the panel, discussion moderated by Yana, whatever that last name is, forecasting really interesting things coming to the crypto market in 2025. And while some investors focus on the pro-crypto stance of the U.S. President Trumpster, Turner emphasized the broader regulatory momentum is what matters most, as he shared here. When you look at the potential of having market structure regulation of the U.S., stablecoin regulation, and just the fact across the board, not just President Trumpster himself, but the SEC and all these regulatory industries are really embracing thy crypto. Now, their co-founder of Signum, Thomas Eichenberger, said international banks with the U.S. branches are also poised to enter the market once the legal landscape becomes clearer. I think it's a matter of a fact that the U.S. banks are preparing to be able to offer crypto custody and at least crypto spot trading services anytime soon. I think by then I would agree with you, Eric, he continued, projecting a continued phase of market uncertainty until the U.S. establishes a clear regulatory framework. Now, with the establishment of clear crypto rules from banks in the United States, there'll be a rush for crypto services by the large international banks that are incorporated outside of the U.S. that have U.S.-based presence. Some of them may have their strategic plans in their cupboard to offer crypto-related services, he said, but have been afraid that at some point they will be gone after by any of the U.S. regulatory authorities. Now I think there is no one to be afraid of anymore in terms of regulatory authorities worldwide. So I think many of the large international banks will launch this year. Let me know if you agree or disagree with the analysts. So let's dive into our next story with the latest from Adam Back, the Bitcoin OG himself. Some believe he's Satoshi. Headline reads, Bitcoin may rival gold as inflation hedge over the next decade. That's right. And Bitcoin could begin to take the market share from gold over the next decade as a hedge inflation during the geopolitical uncertainty, according to the Blockstream CEO and the Bitcoin OG. Adam Beck. Speaking during a fireside chat, he said at the Paris Blockchain Week, rising inflation and monetary instability across global economies will drive broader BIDI adoption. He compared the cryptocurrency to gold, noticing its scarcity and growing recognition as a store of value despite its 30% correction from the all-time high, above 109. Now, I did the math. A 45% correction from the 109 top, we dropped to about 60,000, just FYI. Quoting him here, Bitcoin has the advantage of being like gold. It is a scarce asset, but also undergoing an adoption curve. I think it's superior to gold, in my humble opinion, and quoting the great Max Kaiser, gold is the poor man's Bitcoin because gold, you can say, has relative scarcity. Bitcoin has true scarcity. They can never print more than 21 million coins. There can never be more than a circulation of 21 million. Gold, they can just invest more into digging it up from the earth. And that's a fact, Jack. Also, maybe our vaults have fool's gold in it, meaning they may not exist at Fort Knox because it's yet to be audited and it's been over 50 years. So you tell me your thoughts. Inflation continues to plague global economies, with major currencies like the US dollar and the euro seeing their supplies rise by more than 50% over the past 5 years. That's 10% per year on average. A development that may drive the BIDI adoption as a hedge against monetary destabilization, according to the OG. Quoting him again. Eventually, that money is used to buy all the goods. So eventually, they'll go up by that much, particularly hard assets like housing, anything physical, long term. The inflation rate is probably 10 or 15% for the next decade. An investment return that is very hard to get with stocks or housing rentals. I dare say that's probably ballpark low. I'd say it may be as high as 20, 30%. What are your thoughts, family? So there is a real prospect of Bitcoin competing with gold and then starting to take some of the gold use cases, like as a geopolitical hedge, take some of that money, put it in the preload BIDI because it's going up forever, Laura. Couldn't agree more, Adam. The Federal Reserve Bank of Cleveland expects a 10-year inflation rate to average 0.18%, which I think is a bunch of horseshit. What's your thoughts on that, broskies? However, alternative data points to a potential uptick in inflation over the next 5 years. Consumer inflation expectations spiked to 5% for the next year and 4.1% over the next 5 years. A development amplifying economic concerns, according to a consumer survey from the University of Michigan. All I know is I believe nothing, especially surveys from universities around the world. I dare say they're probably low balling it. I'd say it might be 3 to 4x that. But what do I know? I'm just a YouTuber. Now, beyond growing monetary instability, U.S.-based spot Bitcoin ETFs and a more crypto-friendly U.S. admin under the Trumpster may help boost the BIDI adoption as a hedge against inflation. Quoting Adam Beck, U.S. regulators approved the ETFs finally, and the current U.S. admin under Trump is removing a lot of the negative regulation that was intended to slow down the crypto adoption, such as Operation Choke Point 2.0. Back argued that BIDI adoption amongst the private investors should precede institutional or governmental accumulation. Quoting him here, I prefer that those people buy the BIDI ahead of governments because as soon as the governments buy, it's probably going to create a wave of other governments competing with them. And quoting Margot Martin, President Trump signs the executive order establishing a strategic Bitcoin reserve for the U.S. digital stockpile. That's right. They did both, and they separated the stockpile from the Bitcoin strategic reserve. And that was very bullish news, but here we are, correcting in the 70s. So yeah, that was on March 7th. Trump signed the executive order, creating the Bitcoin reserve, seeded with Bitcoin seized from criminals, drug traffickers, anti-money laundering, tax avoidance. A move that the industry leaders have called a major step towards integrating the preload BIDI into the traditional financial system. And if you don't know, now you know, broskies. Let's continue with the news. BIDI broskies and BIDI baddies holding it down. After the infamous freeze frame, headline here reads, lawyer sues U.S. Homeland Department to probe supposed Satoshi Nakamoto meeting. That's right, they claim the government knows exactly who Satoshi is. A crypto lawyer sued the U.S. Department of the Homeland Security, alleging the agency may know who created Bitcoin, compelling the department to share what it knows. Now, the Freedom of Information Act lawsuit was filed by James Murphy, who bases accusations on claims made by DHS Special Agent Randa Soud at conference in April of 2019, where she said a few of her colleagues had previously met with 4 people involved in creating Bitcoin. Quoting them here, my Freedom of Information Act lawsuit simply asked for the notes, email, and other documents related to the alleged interview. If the interview really happened at the DHS agent, as they claim, there should be a documentation of the substance of that meeting, added Murphy, who goes by Meta Lawman on X. Here's the infamous post from the thread, the great mystery of the 21st century. Who is Bitcoin creator Satoshi Nakamoto? The United States government claims to know the answer, but isn't talking. So today I sued the U.S. government to find out exactly what it knows. There you go. Speaking of the Offshore Alert Conference North America in Miami of April 2019, he said DHS agents met with the 4 people it believed to have created the BIDI, asking what their motives were and what the end game is for the Bitcoin. The agents flew to California and then realized that he wasn't alone in creating this. There were 3 other people. They sat down and talked with them to find out how this actually works and what the reason for it was. Now, if the DHS restricts disclosure, Murphy said, he'll pursue the case to conclusion to solve the mystery. Here's my 2 Satoshis. The mystery will never be solved. Hence, it will remain a mystery. But what are your thoughts? Murphy, however, noted that it is possible that this dude and the other DHS agents were mistaken and did not interview the real Satoshi Nakamoto. So will the real Satoshi please stand up? Please stand up. Murphy is being assisted by the former Assistant U.S. Attorney Brian Field, who specializes in Freedom of Information Act litigation. The purpose of the Freedom of Information Act is to promote transparency and accountability by granting the public access to information held by the government. Now, Murphy shared 2 questions about the DHS lawsuit, and these are the responses to the questions asked. What is your gut feeling? Do you think the DHS actually interviewed the real Satoshi? Here's the answer. I think it's very possible that the DHS agent was mistaken in what she said at the conference. I think DHS agents may have met with Bitcoin code maintainers or the actual Satoshi imposters. But who knows? The DHS agent was a pretty high-ranking official and was in a position to know what she was talking about. But either way, I think it'll be productive to find out and hopefully resolve this question. Nothing prevents DHS from voluntarily revealing this information without the need for protracted litigation. Question number 2, if the agency did speak with the 4 creators, who may be ordinary U.S. citizens, why do you believe revealing their identity serves the public interest, even if it could put their safety or privacy at risk?
Answer: I don't understand the question. The identities of the creators of all the largest blockchain projects like Charles Hoskinson, Cardano, Vitalik, Ethereum, etc. are all well known in the crypto community. There are also major figures like Mikey Saylor, Tim Draper, and others who have amassed enormous wealth through investments in Bitcoin, and their identities are well known. There are hundreds of documentaries on YouTube where amateur sleuths have tried to identify Satoshi. I am not one of them. I am not hiring investigators to try to track down Satoshi. I'm seeking government records under transparency laws in effect with the US. So if the DHS did in fact learn Satoshi's identity, then I am not sure what the rationale is for dozens of government employees to have this information but withhold it from the general public. Our government is required to be transparent. Well, that's something they have never been. And not keep secrets from the citizens. I have one word: Epstein. Oh, my bad. Gilligan's Island. Absent a legitimate national security concern or other limited exemption, we consider this a fundamental aspect of our freedom in the USA. It is why we have something called the Freedom of Information Act. Transparency is good. The government hiding information from citizens is generally bad. No, I think it's always bad, in my opinion, or they wouldn't be hiding it. I am about open to the fact I'm pro-Bitcoin, having been an investor in Bitcoin since 2017. I speak to groups of execs and policymakers about the BIDI, and I advocate for the BIDI adoption. What I find when I give these talks is very often these audiences who are new to the BIDI struggle with the idea that the creator of Bitcoin is unknown, while the provenance of the other major crypto projects is relatively transparent. So my intention is to either conclusively refute the claim of DHS agent interview of Satoshi or achieve some transparency that will open the door for the greater Bitcoin adoption of the US and around the globe. I support Trump's initiatives to establish the strategic Bitcoin reserve and digital asset stockpile. But there you have it. Again, my humble opinion, it's always going to remain a mystery, and that's definitely a benefit. Clearly. Next story, here's the latest from Plan B. Then we'll get into the bear scenario of 10,000, but we'll end it with on a high note, I promise. And then we'll do some live Q&A. And again, welcome everyone joining us. Technical indicator suggesting Bitcoin bull market hasn't even started yet. That's right. Popular quant analyst Plan B says one key indicator suggests the Bitcoin bull market is just now forming. In a new video update, this anonymous analyst shares that a combination of the 200-week simply suggests Bitcoin may soon enter the explosive uptrend based on the historical precedent. The analyst says the 200-week arithmetic and the 200-week geometric are currently closing together on the chart, signaling a possible BIDI breakout. Quoting him here, it might be that the bull market is still forming and that the arithmetic mean will separate again, will diverge again from the geometric mean. And one more thing to those two lines, notice that you can't have a bear market or a big crash when the 200-week arithmetic, I don't know if I'm even pronouncing that shit right, correct me if I'm wrong, broskies, and the geometric mean are together. The big crashes are here in 2021, 2022 are happening. There is a diversion between the two lines. Also here in 2018, there's a big gap between the two means. Same here in 2014 and 2015. Now, if I remember in math class, a mean is just an average, right? So here you can see the Bitcoin 200-week moving average, and you can see currently there's an orange dot printed, and so there's a lot more upside to go. The analyst says that when the two types of the 200-week means were near each other on the chart in 2020 and 2017, Bitcoin soon went on the explosive run to the upside, quoting the analyst again. In fact, if we look at the historical situations where the lines are together, that would be here at the end of 2020. That's when the bull market began. The end of the bull market, the FOMO, fear of missing out phase. Same thing in the beginning of 2017. The lines were together. So the arithmetic mean, the geometric mean together could mean that the bull market is just about to start. Well, if the bull market is just about to start, get ready to let her rip, Tater Chip. And also he points out here, even with today's low Bitcoin prices, on-chain indicators still signaling a bull market. So in my opinion, this is the normal bull market dip, not a transition from a bull phase to the distribution phase and then the bear phase. So there you have it. I mean, look at all the halvings that have come before this halving, the three previous halvings. Anytime you see those red dots, that's just the beginning. I mean, things are about to get lit. In my humble opinion, you ain't seen nothing yet, but I promise to share the super bear scenario of Bloomberg projecting 10,000. So that's going to come up next. Now for our feature story of the day, Bloomberg analyst Mike McGlone predicts Bitcoin can sink all the way back to $10,000 per coin. Oh no. But that's right. This article was published, as you can see here. Bloomberg strategist Mike McGlone offers insights to the global market crash and says the pre-low BIDI can plunge all the way down to 10,000 as a part of the broader
Global reset. Let me know if you agree, disagree with the analysts. Diving into the chaos of the global markets, Bloomberg senior commodity strategist Mike McGlone warns of more turmoil being on the way. In an exclusive interview, McGlone points to the deepening market sell-offs intensified by the POTUS. With the ongoing tariff wars and forecasting a sharp correction in the crypto assets, he predicts Bitcoin can tumble to 10,000 per coin. Now, to put that into perspective, the 2017 cycle peak was like 19.9, just shy of 20. So he's ultimately saying we're going to go back to a price action we haven't seen in 8 years. I'm highly skeptical, but nonetheless, we're entertaining it. Let me know your thoughts, fam. Quoting him here. Look at Dogecoin. It still has a $20 billion market cap. It should go to zero. Now, I can't argue with him there. I don't understand why Dogecoin exists myself. The whole space needs a purging, just like the dot-com bubble did. So he's ultimately saying until these shit coins get wrecked and all that market share goes into Bitcoin, we have some correcting to do. And according to McGlone, the Bitcoin price could face significant downward pressure as part of the broader market resets. Despite the relatively supportive regulatory environment, he cautions that Bitcoin's digital gold narratives is facing a stress test. Well, guess what? There is no second best on every weapons test, including the stress test, broskies. But quoting him here, anybody who bought the ETFs is learning the hard way. They did not buy digital gold. That's a fact because they don't even hold the underlying asset. All they did was buy a derivative, which is an IOU. That's why I've been warning you guys against the ETFs. They bought more of a value of leverage beta. That's a fact. You could be the alpha or you could be the beta. ETF is the beta. I'm just saying. McGlone also noted that the sharp-eyed traders may still find pockets of opportunities. However, investors should be prepared for a more extended recovery process rather than a quick V-shaped rebound like the one seen after the COVID-19 market crash. Now, that brings back memories because I remember like yesterday. In March of 2020 after COVID, the Bitcoin price ultimately dropped from like 9,000 to 4,000 very temporarily. I took advantage of that dip. Let me know if you guys did. And then from 1 year, from March of 2020 to March of 2021, we went from a bottom of 4,000 to a top of 60,000. So from 4,000 to 60,000 in 12 months. Just saying, if history is to rhyme. And back then, the U.S. stock market was around 1.5 to the GDP. We popped up to 2.2 or so to the GDP. Markets just got too high. How high? So high that I can kiss the sky. How sick? So sick that you can... A little Red Man, Meth Man throwback for you guys. To gain deeper insights into this analysis and hear more of the predictions, check the show notes below the video in the description. And as a bonus, I covered a super bear scenario, so I got to even it out. Here's the latest from Jan 3, Samson Mao. He was recently interviewed by Simply Bitcoin, and he says Bitcoin should be at 200,000 right now, even 2 million per biddy. And he breaks down why Bitcoin is way overdue for a price correction, and not just any correction. A big one. Will it be the next move, a violent catch-up? Will we get the infamous Omega candle? You guys let me know your thoughts. He also pointed out that everything happening today was set in motion back in 1971. Nothing can be done to avoid the great monetary reconciliation. Not improving government efficiency, not lowering 10-year rates, not tariffs, not rebalancing the global trade. The only safe haven is Bitcoin. I repeat, the only safe haven is Bitcoin. Plan accordingly. Bitcoin is my plan A, B, C, D, and E. And if you don't know now, you know. Let me know if you guys agree, disagree with Samson Mao. Holla at your boy. And welcome, everyone. Catching up on the chat here. Here we go. XRP and Garlinghouse start a campaign that now is revealed who is Satoshi, and they might sell. Yeah, not a good look with them actually investing a lot of money into fudding Bitcoin. No respect. 130 next week would be amazing. Let her rip, Tater Chip. 50,000 calling for the Shalonius Monk. Ron P. Job bless, broski. Bitcoin is going up 15x this year. It's a guarantee. It's a lock, motherfrickers. Hey, Survive. They're wild, aren't they? I had to cut a hole in the tree where the hive to harvest. I'll leave them alone for the most part. Bitcoin has a huge market cap. Down to 10,000, I think not. Yeah, I wonder what the market cap would be, hypothetically, if we hit 10. Jeez Louise. I think we drop, just a hypothetical. We're at 1.5 trillion. Maybe we drop to a half a trillion if we saw a 10,000 Bitcoin. It just don't seem logical on the grand scheme of things. But again, we entertain in it for the hell of it. You guys let me know your thoughts. I'm more on Samson's side than Mike McGlone. Yeah, I mean, I don't even think we'll drop below 69, but I'm a perma bull. You know what I mean? So I am based 420 style base for the broskies. And we do have a live poll. We'll end the poll at the top of the hour, and I'll read the results out loud. I want to know if you think the bitty bottom is in. Let me know.